is Lauren Garden. I'm a member of Intro's Outsource Accounting Services Group, and today I want to talk about cash flow management. I have Jackie Platt here with me. She is a certified QuickBooks ProAdvisor and a certified Sage Intacct accounting specialist with over 20 years of experience. As a member of Intro's Outsource Accounting Services Group, she's seen it all and helped countless businesses revamp their cash processes and build cash flow forecasts. So who better to join me today? Hi, Jackie.
Hi, Lauren.
So at Intro, we've been hearing that cash flow management is a top priority for many businesses right now. Managing your cash can be stressful, so we want to quickly provide some insight and tips that will help get you back on track. If you have any questions or need additional support after listening to this, please email me at lauren@introcpa.com. That's LAUREN@introcpa.com. If you'd like to read additional materials related to this topic, visit our website at www.introcpa.com/Lauren. All right, so let's dive right in. Jackie, when you first start working with a client and you know that cash flow is something they're struggling with, what's usually the number one thing that they're not doing that they should be doing?
The number one thing I would say is invoicing on time. Invoicing your customers in a timely manner is critical for keeping your cash coming in. Another thing I see happen is not an intense focus on collections.
Mm-hmm.
So we need to make sure we understand where our accounts receivable outstanding invoices are and follow up with that regularly. You might want to consider invoicing customers more frequently. For example, if you're typically invoicing at the beginning of the month, let's consider billing in the middle of the month or when jobs or services are provided as opposed to waiting.
Absolutely. Good ideas. All right. So you've evaluated your receivables, made any possible improvements you could there. What's the next logical step?
The next thing we'd want to do is evaluate and understand our outflows. So accounts receivable is going to be the majority of your inflows. So then you have to understand where your disbursements are. So first thing would be to ensure that payroll is going to be covered. You understand how much you're going to be paying out and when. That's number one.
Mm-hmm.
Next, you want to understand what your fixed expenses are. For example, loan payments, rent, those kind of things. And then you want to consider your variable expenses, which would be disbursements that are a little easier to perhaps push out if you don't have enough cash to pay them all. So,
Absolutely. And something I just add here that I've seen with many of my clients is you want to make sure you're recording your cash activity in your accounting system in a timely fashion. You need to be recording that stuff, not doing it a month later. And you should also regularly log into your bank account, check the bank balances there, make sure those make sense, and really just make sure you know what money you have and that your records are up to date. So if you feel like you've gotten all of those things organized, the AR and AP, but you need a more formal process than what we just talked about, what more can you do? Are there other tools you could utilize to get your cash flow in order?
Absolutely. Probably the most frequently used tool in our group would be a 13-week rolling cash flow model that's actually in Excel. And I think you might have an example of that to show.
Absolutely.
I can walk us through how that works.
All right.
Perfect. So we typically do it for a 13-week period of time, which is a calendar quarter. It gets a little harder to estimate your inflows and outflows after that time period. What this model does is take your beginning cash balance at the beginning of week one, and we estimate down what we think our cash receipts are going to be, what our collections are going to be. We work our way down to disbursements, Payroll, you'll see, is the first line in the model, then your debt, insurances, rent, so on and so forth. We have an estimate for variable expenses, and it gives us what we think our estimated cash is at the end of the week. So that cash will roll up to be your beginning cash at the next week, and so on and so forth. As you plug in the payments and the receipts that you expect, this is all projected, you will see if you have any negative cash situations. And that's when you're going to decide if you're going to juggle some disbursements around, or you need to increase your collection efforts, or perhaps draw on a line of credit, that kind of thing.
Absolutely. It's a really good decision-making tool that you can use. And another thing worth mentioning is you might be able to use your accounting system as opposed to Excel to do a cash flow projection. It really depends on the accounting system that you use and how updated the information in the system is, and how much setup time you're willing to put in to get all of the budgeted information into the accounting system to get a complete and accurate forecast. So it does take some work up front. It would need to be updated regularly, just like this Excel file would need to be. So, but it might be an option. And there are also some applications available that can integrate with your accounting software that can be used for cash flow forecasts as well. So, all right, so you've done everything we talked about. Your billing and collections are up to date. You've organized your accounts payable. You know who you need to pay and when. You have a way to forecast your upcoming cash needs, and you see you're going to be short on cash after doing all of that. What do you do?
Well, we have several different things that you can do. First idea would be going to your bank, perhaps to request a line of credit, or if you have an existing line of credit, you would be drawing on that. Mm-hmm. An existing line of credit could also get an increased balance, so you could apply to actually have a higher limit. There's other kind of loan options that your bank can offer you. So that's one thing, reach out to your bank. Another thing would be investments from owners. Could be on a loan basis or more of a permanent contribution. Another idea, we could try to convert different assets that are on our balance sheet. For example, if we have investments, perhaps you want to pull some of that out. Those are some ideas for how to get more cash in. Another idea would be to manage payments out to your critical vendors. You are very important to them. They're important to you. Give them a call, see if they're willing to work out some new payment options while you're going through this crunch. And I think you'd be surprised that they're quite willing to work with you. So,
yeah, absolutely. Those are great tips. All right. So Jackie, thank you so much for talking with me today about this. And I hope everyone found this information useful and can walk away with some actionable ideas to help improve your cash flow management processes. If you have any questions, please email me at lauren@inserocpa.com. And for additional materials on cash flow management, visit www.inserocpa.com/Lauren. Thanks for watching.